morning and welcome to Moneycontrol live stream. You're watching the opening bell and I'm Santosh Nair. Well, a quick look at the trade setup ahead of market open. The SGX Nifty futures are indicating a bearish start for Indian equities. The SGX Nifty futures are down by close to about 45 points as we speak. Asian markets are mostly higher. Japan is the only exception, while shares of Hong Kong, South Korea and China are trading higher. US equities ended lower on Tuesday, while the European markets ended firm. So, overall it is fairly a mixed trend as far as the global markets are concerned. In the FNO section, we are seeing long build up in futures of Manappuram Finance, SBI Life, Federal Bank and Astral. And we are seeing some bit of short covering in futures of HDFC Life, Dr. Lal Path Labs and Metropolis Healthcare. Well, and now we are joined by Neha Dave on opening bell. Neha Dave is the senior analyst with Moneycontrol Pro, who will tell us about what is happening in the banking sector right now and what are the things that one should be keeping an eye out for now that the earnings season is just around the corner. Neha, good morning and welcome to opening bell.
Good morning, Santosh. Thanks for having me.
Well, so Neha, tell us broadly what is the kind of earnings that we can expect from the banking sector. All these stocks have seen a fair bit of run up and both the first and second quarter numbers were quite strong. So, can we expect some kind of a similar trend in the third sector as well, third quarter as well? I beg your pardon.
Yes, Santosh, as you rightly mentioned that the current fiscal, that is FY23, has been very good for banking sector in terms of earnings growth, and we will see the similar trend in Q3 FY23 also. Both private as well as public sector banks are likely to see a strong set of earnings growth in the coming quarter, and this will be mainly driven by a strong top line growth and lower credit cost or the lower provisions. Now, as we know that the credit growth for the banking system has hit a 10-year high of around 17% as of mid-December. And so we can see a strong top-line growth from banks. It would be very interesting to see how margins pan out in the coming quarter. RBI has increased the policy rates by 225 basis points so far in the current fiscal, but we may see some kind of margin expansion or stable margins for the banks in the next quarter, primarily because loans get repriced at the higher rates and deposits get repriced only with a lag effect. So the top line growth undoubtedly is likely to be strong, and this point is also being validated by the business updates which has been released by some of the leading banks like Federal Bank, IndusInd Bank has come out with their business updates showing the strong advances growth of around 18-19%. So top line is something that is going to be very strong. Talking about the other aspects of the earnings, the non-interest income, there could be some pressure on non-interest income, primarily because the higher yields on government securities could lead to some trading losses or mark-to-market losses for the banks. And talking about the most important aspect, asset quality, it has trended very well so far and likely to improve going forward also. The gross NPA for the banking system is almost at a 7-year low of 5%. Net NPA is at a 10-year low. Provision coverage ratio is very high, so credit cost will be low, and that will boost the earnings going forward.
Well, Neha, you just mentioned about rising yields on government securities. Now, there used to be a time when whenever interest rates would go up, PSU banks would feel the pinch the most because they had a huge exposure to government securities. But now that does not seem to be the case, at least for the last many quarters. So, what has really changed for PSU banks? Why are they not so sensitive to rising interest rates, rising yields on government securities?
Yes. So what has happened to public sector banks is they still continue to have higher investment to asset ratio, indicating that they tend to invest more in government securities as compared to private sector banks. So obviously they are more vulnerable to higher rising yields. That said, for the public sector banks, what has played out really well is the significant improvement in asset quality and the lower credit cost. So, a slight increase in the yields may lead to some trading losses, but that is likely to be offset by a very low credit cost, and which has been the trend. We may not see a significant, problem or significant hit to the earnings of public sector banks because of the rising yields.
So, Neha, also you mentioned a short while back that typically rising interest rates are good for banks. That is because when they borrow, they increase the rates quickly, but at the same time, the cost of funds which they collect through deposits, that rate is increased with a lag. So, the difference then flows into the bank's bottom line. But till what point does actually do rising interest rates actually work in favor of banks' earnings?
Yes, so rising interest rates initially obviously leads to a margin expansion, I mean, as and when the bank starts transmitting that in terms of higher deposit rates, that impacts the margins profile of the bank. But having said that, the margins can come under pressure, say after the first quarter, and if RBI continues to hike the interest rates, that will definitely adversely impact the profitability in terms of the margins getting hit. Having said that, one of the very interesting aspect of the banking sector currently is that the credit offtake has picked up, and whatever pressure on margins that we may see is likely to be offset by higher credit offtake. As I mentioned earlier, that credit growth has hit 17%, and it may continue to be healthy in the coming quarters also, led by retail lending, MSME growth, and also the demand from corporate credit can pick up, going forward. So that can, to some extent or partially, offset the negative margin impacts for banks.
Well, Neha, also we've seen the stocks run up quite a bit. So, to what extent do you think that the market may have already discounted the strong earnings in the third quarter, and what are likely to be the key triggers for banks here on? What would be investors keeping an eye out for?
Yes. As we have seen the performance of the banks, that has been very good, especially the public sector banks in 2022. They significantly outperformed the private peers. Going forward, it will be very interesting to see if public sector banks can sustain the operating performance, what they have reported in terms of overall earnings growth. And yeah, it would be very interesting to see, bank specific, what is the margin movements likely to be, what the margins banks are likely to report. And the key triggers as far as the banking stocks is concerned, for the public sector banks, obviously one thing that is to look out is the successful privatization or disinvestment of IDBI Bank would be the key trigger for public sector banks. They are already trading at a very low valuation, that is below one-time forward book value, for the reasons that we all know. But that could trigger some kind of upside in the public sector banks. As far as the private banks is concerned, we have seen that the valuation in some of the leading private banks has run up, and it's almost looking full. But having said that, there are names like, there are non-frontline private banks, or the mid or the small cap private banks, where we could see some valuation catching up. So that space looks interesting as far as the valuation is concerned.
Well, Neha, I'll just get back to you in a minute. The market has just opened. It's a flattish start this morning. The Nifty and Sensex are slightly up in early trade. The Nifty Bank is up by 0.1% and the Nifty Mid Cap is up by about 0.2%. Market breadth in favor of the bulls. 1,300 stocks are up, while about less than 500 stocks are down at this point in time. The Sensex up by just about 5 points, and the Nifty is also pretty much flat. Well, Neha, let's now talk about some specific stocks. Now, within the PSU space, State Bank of India and Bank of Baroda have been among the star performers. What are the key triggers now for these stocks? Is the best already over for SBI and BoB, or do you see still further room for re-rating in these stocks?
Yeah, public sector banks, especially SBI, continues to trade at a very attractive valuation despite the run-up that we have seen. There is a lot of room for further re-rating. If we see in a typical bull market, typically when the banking sector cycle is favorable, SBI used to trade at a multiple of around 1.5 to 1.6, and currently it is below that. So there is still room for re-rating as far as SBI is concerned. There is the earnings, the growth is very strong. The asset quality issues are behind us. So there is definitely a room for valuation re-rating in case of both SBI and Bank of Baroda. And the key trigger obviously would be the forthcoming earnings. And as I mentioned earlier, the successful disinvestment of IDBI Bank would also be one of the trigger for the stocks. The budget, the upcoming budget, we don't see, the key triggers for the bank per se, because since last year, government has stopped announcing the recapitalization amount for public sector banks. Having said that, if the budget if is it's a favors a lot of capital expenditure, that would be good for public sector banks, as that can boost their credit growth.
And what about private sector banks, Neha? We've seen a good run up in shares of ICICI Bank, HDFC Bank. What's your view there?
Yeah, so private banks continue to perform well. Now, if we compare the performance of ICICI Bank with that of HDFC, HDFC Bank has definitely underperformed, and there are a couple of reasons for the same. One is obviously the impending merger, which is weighing on the stock performance. It has been an overhang. So it would be very interesting to see how the street reacts once the merger gets implemented. There is a room for re-rating in HDFC Bank, but there are key concerns of, there can be a likely increase in the regulatory cost post the merger. So it is a kind of a contra bet currently, where the performance continues to be very good, but there is a lot of uncertainty related to merger. If everything goes smooth, there could be further upside to HDFC Bank and catching up in terms of valuation. ICICI Bank continues to perform well in terms of earnings growth, and it would be interesting to see how the retail lending pans out going forward. The stock has re-rated, and it will. The valuation will sustain going forward also. But between HDFC and ICICI Bank, HDFC Bank will be a contra bet. A play on say a lot of once the merger is announced, how the stock. How the stock price pans out.
Well, one last question before we let you go, Neha. What's your take on some of the smaller private sector banks, let's say DCB, Karur Vysya, for example?
Yeah, as I mentioned earlier, the smaller private banks, there is a room for valuation re-rating. There is a significant discount to the larger private, and that will continue to remain so. But we have seen some of the performance of some of these banks improving, and like DCB Bank has seen a significant improvement. The management guidance is also very upbeat. So we can see some re-rating for DCB Bank. Other banks like, say for example, CSB Bank continues to do well. The latest business update that has been released shows that their advances have grown by 25% as of December, and led by gold loans, which has increased by 50%. So CSB Bank also looks good. Federal has been a good name in the mid-cap space. Of all the smaller banks, obviously the preference would be DCB Bank and Federal Bank. They will continue to do well. One stock which has been outlier in the banking space is Bandhan Bank, which had reported a very disappointing earnings in the first half. So the street would be looking forward in terms of the management guidance and the improvement in the bank's performance going forward. The stock has significantly underperformed. So it would be very interesting to watch how the asset quality pans out for Bandhan Bank.
Well, thanks for sharing all those insights with us, Neha. I'm sure our viewers would have plenty to take away from that conversation. Well, that's all that we have in this episode of Opening Bell. Thank you for watching, and we'll be back with you again at 3 p.m. this afternoon. In the meantime, for all news, views and analysis, stay logged on to moneycontrol.com.